Hey traders, welcome back to the Forex Muse, your go-to channel for mastering the art and psychology of Forex trading. Today we're diving deep into a topic that can make or break your trading career: fear and greed. These are the trader's worst enemies, and trust me, they've tripped up even the best of us. If you've ever hesitated to pull the trigger on a trade or held onto a losing position way too long, you've felt these emotions at play. By the end of this video, you'll understand exactly how fear and greed mess with your head, how they show up in your trades, and most importantly, how to manage them like a pro. So grab a coffee, get your notebook ready, and let's get started. Oh, and if you find this valuable, hit that like button and subscribe to the Forex Muse for more trading wisdom. Let's do this. So, what exactly are fear and greed in the context of Forex trading? At their core, they're emotions, natural human reactions to risk and reward. But in trading, they can hijack your decision-making process if you're not careful. Fear is that sinking feeling when you're staring at a trade going south. It's the voice in your head saying, "What if I lose everything?" It can make you exit a trade too early, skip a solid setup, or avoid trading altogether. Greed, on the other hand, is the opposite. It's the thrill of wanting more. It's when you see a trade going your way and think, "Why close it now? I can make a fortune." Greed pushes you to overtrade, ignore your risk management, or hold on to winners until they turn into losers. Here's the kicker. Both emotions stem from the same place: your brain's survival instincts. Back in the day, fear kept us alive by avoiding danger, and greed drove us to gather more resources. But in the modern world of Forex, those instincts can sabotage your account. Let me give you a quick example. Imagine you're trading GBP USD and you've got a solid setup based on your strategy. The price is moving in your favor, but then a news event spikes volatility. Fear creeps in. What if I lose my profits? So you close the trade early, only to watch the price hit your original target. Or maybe greed takes over and you move your take profit further, hoping for a bigger win, only for the market to reverse. Sound familiar? By understanding how these emotions work, we can start to spot them in action. Let's break each one down further. Let's talk about fear first, because it's probably the most common emotion traders face. Fear in trading comes in a few flavors, and I'm going to walk you through the big ones: fear of loss, fear of missing out, FOMO, and fear of being wrong. Fear of loss is the classic. You open a trade, and as soon as it dips a few pips, your heart starts racing. You're glued to the screen, second-guessing your analysis. This fear often leads to cutting trades prematurely. For example, last month, I had a student who kept exiting his trades at break-even because he couldn't stomach a small drawdown. His strategy was sound, but fear was killing his profits. Fear of missing out, or FOMO, is another beast. You see a currency pair like GBP JPY spiking, and everyone on social media is talking about it. You jump in without a plan just because you're afraid of missing the big move. Spoiler alert, that's usually when the market pulls back and you're left holding the bag. Fear of being wrong is sneakier. As traders, we hate admitting we're wrong. It's an ego thing. So instead of taking a small loss, you might avoid entering a trade altogether or freeze when it's time to cut losses. Here's a real-world example from my own trading. A while back, I was eyeing a breakout on GBP USD. My analysis was solid: trend lines, support levels, the works. But right before I entered, a random tweet about oil prices spooked me. I hesitated, fearing I'd be wrong, and missed a 100-pip move. That's fear in action. So, how does fear show up in your trades? Maybe you're avoiding bigger lot sizes even though your account can handle it, or you're constantly tweaking your strategy because you're scared it's not perfect. The truth is, fear will always be there. It's part of being human, but we can manage it. I'll share some practical tips later, so stick with me. Now, let's flip the coin and talk about greed. If fear holds you back, greed pushes you too far. Greed is that little devil on your shoulder whispering, "You can make more." And in Forex, that's a dangerous mindset. Greed shows up in a few ways. First, there's overtrading. You hit your daily profit target, but instead of calling it a day, you keep trading because you're on a winning streak. Next thing you know, you give back all your gains, and then some. Another form is over-leveraging. You've got a $1,000 account, but you're trading 5 lots on GBP USD because you want to maximize your profits. One bad move, and your account is toast. I've seen this happen too many times. Traders chasing big wins only to blow up their accounts. Then there's ignoring your trading plan. You've got a take profit set at 50 pips, but the trade's going so well, you decide to let it run. Greed convinces you the market will keep going your way, but markets don't care about your hopes. I learned this the hard way early in my career. I was trading GBUSD up 80 pips, and instead of taking profits, I got greedy. The market reversed, and I ended up with a 20 pip loss. Ouch. Greed also loves to team up with revenge trading. You lose a trade, and instead of stepping back, you double down to make it back. That's greed telling you you're smarter than the market. Spoiler, you're not. Here's a stat to drive it home. Studies show that traders who overtrade or chase profits tend to lose 30 to 50% more than those who stick to a disciplined plan. Greed doesn't just hurt your account, it kills your confidence. All right, we've dissected fear and greed, but here's the good news. You can manage these emotions. It's not about eliminating them. That's impossible. It's about controlling how they influence your trades. Here are 5 practical strategies to keep fear and greed in check. 1. Stick to a trading plan. This is your anchor. Your plan should include entry and exit rules, risk management, and daily profit loss limits. For example, I never risk more than 1% of my account on a single trade. When fear or greed tries to take over, my plan keeps me grounded. 2. Use a trading journal. Write down every trade, why you entered, how you felt, and what happened. Reviewing my journal helped me spot patterns, like how I'd skip trades when I was scared or overtrade when I was greedy. It's like therapy for traders. 3. Practice proper risk management. This is non-negotiable. Set stop losses and take profits before you enter a trade, and don't touch them. Also, don't risk more than you're willing to lose. If you're sweating every pip, you're over-leveraged. 4. Take breaks. If you're feeling emotional, whether it's fear after a loss or greed after a win, step away from the charts. Go for a walk, hit the gym, or meditate. I take a 10-minute break after every trade to reset my mind. 5. Focus on process, not profits. Instead of obsessing over how much money you're making, focus on executing your strategy perfectly. Did you follow your rules? Did you manage risk? That's what builds long-term success. Here's a bonus tip. Visualize your trades before you place them. Picture the worst-case scenario, a stop-loss hit, and accept it. Then picture the best case, hitting your target. This mental rehearsal takes the emotional sting out of trading. And there you have it, traders. A deep dive into fear and greed, the 2 emotions that can derail your Forex journey if you let them. To recap, fear makes you hesitate or exit too early, while greed pushes you to overtrade or chase unrealistic wins. But with a solid plan, risk management, and self-awareness, you can keep them under control. If you enjoyed this video, give it a thumbs up, and don't forget to subscribe to the Forex Muse for more tips to level up your trading game. Drop a comment below. Tell me how fear or greed has shown up in your trades and how you're working to manage it. I read every comment and love hearing from you. Until next time, trade smart and stay disciplined.